The 5 stocks that I went ahead and picked up this week. What is happening, investors? It is your boy Jack. I am not a financial advisor, and this week I did go ahead and pick myself up 5 stocks, 2 of which are completely new additions to the portfolio. If you follow me on Instagram at Jack Spencer Investing, you will know what 3 of these companies are already. So if you want little sneak peeks in future, feel free to go follow me on Instagram. I always reply to DMs as well. I've had a few people asking me of late, why am I still buying stocks? Why am I buying stocks every single week when I quite clearly understand the fact that the market could continue to go down lower?
Why are you buying these stocks? The market is going to crash again.
Chill out there, buddy. As of late, I have missed out on too many opportunities because of the fact I've been waiting for a 5 to 10% drop. If we take Spotify for example, okay, about a month I made a video speaking about Spotify, and I had so much praise for them as a company in this video, and I think that they are doing absolutely fantastically. And since I've made that video, Spotify has gone up over 40% in value, okay? That's 40% I have completely missed out on, alongside all future growth potential. All because I wanted to see a 5 to 10% dip in the company. So oftentimes, if you're waiting for that 5 to 10% dip, you could end up missing out on literally hundreds of percent. In the space of a month, I missed out on 40% in Spotify because of my greed. So that is why I am still buying companies right now, okay? Because I don't want to be too greedy. I'm just going to keep dollar cost averaging, and as the market gets lower, I'll get a little bit more aggressive with my spending. So here are the 5 companies that I went ahead and bought this week, and we're going to start it off with my 2 brand new companies. The first one is Virgin Galactic, ticker symbol SPCE. These guys literally want to send the everyday person to space, and I find them very, very exciting. Second up, we have Qualcomm, ticker symbol QCOM. Potentially the biggest play in regards to 5G right now. Third up, we have Facebook, ticker symbol FB. This is the biggest position on my portfolio and is literally my favorite company in the world. And if you're aware, they dropped close to 8% in a day on Friday, so I had to pick some up. Fourth up, we have Apple, ticker symbol AAPL, and these are actually currently the second biggest position in my portfolio. And fifth up, we have Microsoft, ticker symbol MSFT, the third biggest position in my portfolio, who some relatively big news has came out about. So the first company we're going to speak about today is Virgin Galactic, but right before we get into that, can I please ask you to smash that like button? It helps me out absolutely massively. If we hit 300 likes within the next 24 hours, tomorrow I'm going to release a video, the top 10 stocks to buy in July 2020. We're getting so close to 10,000 subs now. I appreciate every single like, every single comment, every single new sub. I have 2 really exciting announcements when we get to 10,000, so if you are new around here, please hit that subscribe button right now. It means so much to me. So with that being said, guys, let's get into our first company of today, Virgin Galactic. The very first company we went ahead and picked up, a brand new holding, is Virgin Galactic, okay? On the screen right now, you'll see what I picked up, how many shares, the cost basis, etc, etc. Now this is a really, really exciting company to me. I'm a young person, okay? I'm 22 years old. I can afford to take some risk. I have no debt whatsoever. I have money saved. I can afford to take some risk. When I started investing, I was really interested in these dividend companies, okay? The slow growth, but you know, really steady growth companies that will give you 3 or 4% of your money back every single year. But since I've started looking into stocks, okay, the last 4 to 6 months realistically, I have kind of realized that, you know, at this age, I should be putting some money into these smaller cap companies that have potential to give me back an awful lot of money. Now, don't get me wrong, my main positions in my portfolio are in the massive companies. You know, I have the FANG stocks, I have Microsoft. They're all my biggest positions. So although a lot of my money is in the massive companies, you know, the really popular, well-established companies, I think that I have to start, you know, being a little bit more risk tolerant and getting into some smaller cap companies like Virgin Galactic. If everything goes well for this company, their long-term potential is absolutely insane. I mean, if we look at Amazon, for example, okay? People didn't get rich buying Amazon stock here at $1,800 a share, okay? People got rich buying Amazon down here when it was $14 a share, okay? That's where people get rich, when they take that little bit of a risk. And I think the perfect time to do that is now, as a young person with very little responsibility, with no debt whatsoever. It makes sense. Why this company? Why is this so exciting? They literally want to bring people to space, not just astronauts. They want to make space travel a commercial business. And can you imagine if that becomes a reality? That's going to be insane, especially if these are the first big company to do so. They're the world's first commercial space line and vertically integrated aerospace company. Now, I don't think this is going to be a necessarily easy feat. I mean, getting the everyday person to space, that can't be an easy thing to achieve. But if it's to happen, my days, will it be amazing. And this man right here is the founder, okay? Richard Branson. Think what you want of him. he was genuinely one of the first times I kind of got to know what an entrepreneur was. I remember reading this book when I was probably 12, maybe 13, you know, a young person who doesn't really understand what business is, okay? And it's just called Screw It, Let's Do It, and it's lessons in life. And I'll be honest, I don't really remember anything about this book. I don't remember if it was good, if it was bad, but I remember back then, it kind of made some switches flick in my head. And even at 12 or 13 years old, I remember being really interested and motivated reading this book, and I was very interested in this man. And I mean, he is undoubtedly an amazing businessman, okay? He founded the Virgin Group in the 1970s, which controls more than 400 companies in various fields. That is a lot of companies. So I like the founder, I like the management, and that is always a bonus when it comes to investing in a company. And just this week, okay, shares of Virgin Galactic surged after announcement that it will train astronauts for NASA. They signed an agreement with NASA that will allow the space tourism venture to train astronauts for trips to the International Space Station. That's just so exciting. They're working with a company like NASA now. I know I just briefly touched off management, but one man I want to mention quickly is George Whiteside, okay? He's the CEO, and he was appointed that role in 2010 by Richard Branson, and he led the transition of the organization from a private entity to its position today as a publicly traded human spaceflight company listed on the NYSE in October 2019. So in the grand scheme of things, a relatively new IPO, but it's always nice to see a CEO being somewhere for over a decade. But if you just go onto their website, you can have a look through their whole team, and I have looked into a few of these people, and I really do just like the look of the team that they have. And again, that is always a big thing, to believe in the management. And already Virgin Galactic has 603 reservations for private passengers to fly to space, with the majority of those tickets sold for $200,000 to $250,000 per person. Now the balance sheet is very good, however it is very small, okay? Current assets 475 million. Total assets about 550 million, okay? Current liabilities 113 million, and total liabilities 136 million. So a really good balance sheet. Quite small in the grand scheme of things, but you know what I mean? This could be the start of something beautiful. So for me personally, very happy to own this company. I know it may seem a little bit speculative or a little bit too high risk for a lot of people, but for me and the position I am in, very happy to own them. Okay, so on to company number 2. The second company we are speaking about today is Qualcomm, and yesterday I went ahead and I picked up 3 shares in the company for just shy of $89 a share. And again, a brand new company added to the portfolio. It's a company who is down about 8.23% from their 6-month highs, which is pretty much in line with the broader market. So a company who is doing pretty much average, but in me, has much better short-term prospects, medium and long-term prospects than a lot of other companies who are down about this much. And a lot of that is because of these little bad boys here, their 5G chips. The very first thing we'll do, a quick look at the balance sheet, okay? Current assets are at 15.3 billion. Total assets are at 31.9 billion. We go down to current liabilities at 9.7 billion. So fantastic position in the short term. And we go down to total liabilities, which are at 28.89 billion. So a good position in the long term. So overall, a very good balance sheet. You were happy with this balance sheet. Qualcomm stands to earn $3 billion through 5G iPhone revenue. Just through iPhone revenue. So recently, a Bank of America analyst called Tal Liani has upgraded the chip designer's price target by 15% to $115 per share, considering as of right now, they're trading at about $88 a share. That is nice. So what about the future prospects and the future growth that we can potentially expect to see from this company, okay? Qualcomm's own data reveals that the company expects its 4G and 5G market to present it with a $48 billion serviceable addressable opportunity, and Liani's revenue opportunity estimation is based on the company holding a 50% market share by the end of 2024. So what does their market share look like right now? It's estimated that Qualcomm captured 53% unit share in the 5G baseband market in 2019, so the biggest player by an absolute long shot. And as of right now, they are the leaders and they are above that 50% market share. So I think this estimate could be very realistic, which will obviously lead to a lot of money for Qualcomm, which will lead to an increased share price. And the global 5G chipset market is to post an 87.8% compound annual growth rate over 2020 to 25. That is an awful lot of growth, guys. That means a lot more money for Qualcomm, which means more money for us investors, which means I go ahead and buy shares now. It's just one of those things where, you know, in a year or two, pretty much everybody is going to have a 5G phone. The same way that right now pretty much everybody has a 4G phone, you know? I know for one, when 5G is out, I am going to get a phone that allows me to use 5G. And I think a lot of people will be in the same boat. And that market cap only being at 99 billion right now does does suggest to me that there could be room for an awful lot more growth if they are to stay the biggest player for a considerable period of time. And that is where I'm going to leave Qualcomm for today. Okay, so we have 3 more companies, and these are all companies that I've already owned and spoken about in the past. Number 3, my baby, literally my favorite company. We're having a look at Facebook, who dropped 8.32%, people. Was I fearful? Was I upset? No, I was very happy, and I went ahead and I picked up 1 more full share, bringing my total position up to 4 shares in Facebook. And there is quite a bit going on in the world of Facebook. I do have a full 15-minute video on Facebook right now, but I probably am going to make an update video, just because a lot of people are talking to me about this stock as of late. My thesis hasn't changed, okay? If I believe in a company in the very long term, I don't invest in them because I think I know exactly what's going to happen over the next 2 to 3 months. I invest in them because I think that they're going to pay me back a lot of money in the next 5, 10, 20 years. So when I see headlines like this, why Facebook stock just dropped 6.5%? Facebook and Twitter stocks dive as Unilever halts advertising. When I see things like this, it doesn't bother me. When I see an 8% drop in a day, it doesn't bother me. I was happy on this day. My Facebook is now in the red, and I'm happy. I picked up another share, and to be honest, I'll probably pick up another share next week if it is still down, if we are to see more red. It goes back to what I said in the video. If I know I like a company, I'm going to buy them. I'm not going to wait for a 3 to 5% dip or a 10% dip. If it happens, I am going to be more inclined to buy them. I didn't plan on buying any Facebook last week, to be completely honest with you. But then Friday hit, and this happened. They're my favourite company in the world, and they go down nearly 10%. I mean, of course I'm going to buy some. So I'm not actually going to speak about all of the reasons that I absolutely love Facebook today, because there are an absolute metric load of them that are all in my other video. I'll speak about the reasons of why the company is actually going down. But the first thing I will do is we'll have a look at the balance sheet, because if you've seen my previous videos, I get a smile when I look at this balance sheet, okay? Current assets, 69.3 billion. Total assets, 138 billion. Current liabilities, 15 billion. Total liabilities, 33 billion. It is a beautiful asset sheet. It's beautiful. I think I said asset sheet. I obviously meant balance sheet. You try recording a video where you say the same 20 words over and over again. You messed them up, I promise you. So if you're not aware, essentially what's happening is a lot of companies are pulling their ads from Facebook because they don't believe they're doing enough to prevent hate speech. And obviously with everything that's going on in the world, this is a really pressing issue. And as of right now, Facebook is tightening controls on speech as the ad boycott grows. I remember these things happening when I wasn't even interested in the stock market, when I didn't have the slightest interest in the stock market. I remember it happening multiple times on Facebook, and each time the same companies come back. Now it is a big deal because this is how Facebook makes money. They make their money from advertisements. So American Honda has cancelled them. Ben & Jerry's, Birchbox, Eddie Burr, Habitat for Humanity, Jan Sport, Levi Strauss & Co, Magnolia Pictures, loads of names. Verizon a big one. Do I think it was worth Facebook losing over 8% in value in a day? Most certainly not, and that's why straight away I went and picked up a share. And Facebook is doing what they do best. They are addressing and fixing the issue, regardless of what your stance is on Facebook ads. They're doing what they can, they're working on it. Zuckerberg has come out and said that Facebook will hide or block content considered hateful or that could harm voting, with no exception for politicians. It's that simple. Look at the words that come after the companies, okay? Through July, through July, through at least July, through July, through July, through July, through July, okay? July. That's not going to be the worst deal in the world. It's not like all of the ads are gone off Facebook. And do you know why these companies advertise on Facebook? Because it's one of the most effective, cheapest places in the entire world where they can advertise. They will be back. There just isn't a better platform for them to do so. Again, it's one of those things where in my eyes the market has just been completely and utterly unreasonable. And this news happened to come on what was going to be a bad day for tech stocks in general anyway, so it just led to this really, really bad day. There's a lot of people who are afraid right now. But for me personally, if I see another red day or two, Monday and Tuesday in Facebook next week, I'm going to have to pick up another share or two even. I don't really want to because they're already the biggest position in my portfolio. It's just too juicy of a value for me. But I will have a full updated video on Facebook soon. Okay, that is it for Facebook. Now on to Apple. The second biggest position in my portfolio, and I went ahead and I bought an extra half a share. Not for any particular reason. I mean, they did have a red day. They were down about 3%. I just wanted to get more Apple in. They're one of my absolute favourite companies right behind Facebook. Last week, this did happen. Their WWDC 2020, that's just their Worldwide Developers Conference, came out and they announced all of this new stuff. iOS 14, iPadOS 14, Mac stuff, watch stuff, TV, silicon chips, AirPods, loads and loads of interesting stuff. But that wasn't even the reason I bought. They're just one of those companies who I want to buy every week or two, literally slowly but surely get my position in the bigger, as they are one of my absolute favourite companies. There doesn't always need to be some news. If you just want to get some money into the market, you can just invest in your favourite companies. That's what dollar cost averaging is. One quite cool article right now, Wall Street Firm says Apple could surge another 18% and even be the first company to hit a $2 trillion market value next year. If you didn't know just how big Apple's market cap is, 1.53 trillion, making them the biggest market cap that there is as of right now, just in front of Microsoft, who was at a market cap of 1.49 trillion. On Wednesday though, they increased their Apple price tag to $425 from $375. Currently at $353, okay, citing a demand snapback and the upcoming 5G cycle. Again, this 5G cycle is something that's going to be so exciting. Literally coming into the very end of this year, especially going into next year though, I believe. And that's why I want to get into companies like Qualcomm before it all kicks off. They're already an absolutely fantastic company with absolutely fantastic products. I mean, I'm recording on a Mac right now. I always say this when I speak about Apple, and I have my iPhone right here. They have very, very loyal customers, me being one of them. I will never buy a phone that isn't Apple. Their second quarter earnings, okay, reported quarterly revenue of 58.3 billion, edging up 1% compared to the year ago quarter. Now their next quarter's earnings will be interesting to see what happened, and I wouldn't be surprised if it ends up giving people a few red days, but we'll see. And a few quick fire points in regards to their growing list of potential catalysts, okay? First off, 5G. We've already touched on that. Their share buyback program. They remain in a league of its own when it comes to share repurchase, okay? And he believes Apple will continue to buy back stock of about $70 billion annually, similar to its recent rate. And Apple services. Over the past 4 quarters, the segment has generated more than $50 billion in revenue, amounting to nearly 19% of Apple's total sales, and that could just be the beginning. So a lot of growth catalysts, just an amazing company. What else is there to say? One more thing to say is their absolutely incredible balance sheet. Current assets, 143.7 billion. Total assets, 320 billion. Current liabilities, 96 billion. Total liabilities, 241 billion. In the short term, medium term, long term, super long term, 2 million years down the line term, they are looking incredible. And then the final company we're having a look at today is Microsoft, who briefly reached over $200 this week. And when I saw this happening, you know, 200 is just a really round number. I expected it to come down somewhat, and it came down from 203.50 down to about 196 at market close. And I went ahead and I picked up an extra half a share in Microsoft. And that extra half a share went ahead and it pushed them into my third biggest holding. Again, not necessarily a particular reason. I just absolutely love them as a company and want the dollar cost average and will continue to do so. So one brand new piece of news that I want to speak about is Microsoft is to permanently close all of its retail stores. I'm not quite sure how to feel about this, but I think I like it. But right before we get into that, as always, we'll have a quick look at the balance sheet. Okay, current assets, 170 billion. Total assets, 285 billion. Current liabilities, 58 billion. Total liabilities, 170 billion. I mean, beautiful. But anyway, okay, Microsoft is giving up on physical retail. Today, the company announced plans to permanently close all Microsoft store locations in the US and worldwide, except for 4 locations that will be reimagined as experience centers that no longer sell products. The company will concentrate on digital retailing moving forward. Now, you can take this how you want, but if you know me, you know that I'm a big believer that the world is going online, and e-commerce completely and utterly is the future. So to me, I see it as a good thing in all honesty. I know people might see it as a bad thing, but I think it's going to be a good thing. In the short term, it might hurt them a little bit, it might lead to some lost money here or there, but in the long term, I think it will actually save them money. Microsoft says that Microsoft.com and the Xbox and Windows storefronts reach up to 1.2 billion monthly customers in 190 markets. That is a lot of people every single month. Why do they need a few physical stores? And what's even better is that no layoffs will result from today's decision. That is always fantastic to see. They're taking care of their employees. And what's also interesting is that a source with knowledge of Microsoft retail operations told The Verge that this plan was originally in place for next year, but it was accelerated because of the pandemic. But honestly, again, that wasn't even a dictating factor in why I went ahead and bought them. I've done my research, I've done my due diligence. I will just buy them every single week essentially. And they are the 5 companies that I went ahead and purchased this week, people. So guys, I hope that you enjoyed today's video. You can probably see that I'm having a big emphasis on, the tech giants and some growth stocks thrown in there as well. I really want to find more companies like Virgin Galactic to start getting involved in. I really want to get into some of these small market cap, high potential companies. So if you know of any more that you'd like me to check out and potentially make a video on, please let me know in the comment section down below. So I could definitely see a couple of more red days coming relatively soon, but like I've said a couple of times in this video, I don't want to wait for a 5% dip to miss out on 100+%. Like what happened with me in Spotify, I was waiting for 5 to 10%, I missed out on 40. Doesn't really seem worth it to me. But anyway guys, I hope that you all did enjoy today's video. Hope you have an absolutely fantastic weekend. I will catch you for tomorrow's video. Peace.